The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
There's an old saying that the more things change, the more they remain the same. You ever felt that way about stuff in your life?
Absolutely.
Yeah.
It's haven't I seen this before?
So I don't know about you, Perry. Most likely you did, but I remember being in probably junior high school at church youth group, and we had one of the games we played. I don't know that we called it that, but it's called the telephone game, which
right.
one person has a saying and you whisper it to the next person and it goes around the circle and the last person in line has to announce what it was.
Correct. There you go.
And it's never the same.
No, it always loses something in the translation along the way.
And that we actually had studies done on what that is. And what the statistics are. And there's actually a technical word for it because it occurs in business, and it's called the generation loss.
Right. Every time a new generation of something comes up, generally some of that information gets lost or gets worse. Like they said, it's like making a photocopy, and every time you copy the copy, once it becomes a copy of a copy of a copy, it keeps getting worse and worse because you're losing some of the detail as you go along. And it's something that you don't always acknowledge is occurring, but you need to know that and make allowance for that with especially with data, and especially in the digital age. It happens so fast now online. Things will get repeated 1,000 times a day, and by the end of the day, you're not even talking about what you started with at the beginning of the day.
Well, you've probably seen it when you're online reading an article and you come to a chart or a graph or a picture of some sort, and it's not quite sharp. It's not in focus. Well, that's right. Because you're not looking at a copy of the original. Somebody else had copied it, and then they liked it, and they integrated it, or they passed it on. And I see that with the stuff I do and that I provide financial advisor support for. I find a graph and say, that's really good. See if I can find the original because it's really fuzzy.
Right. It's been used and used and used, and you lose a little bit every time. And it's true across the board. And what you really need to make sure is that you're actually losing data sometimes, or the meaning of data when you're looking at the things that have to do with the market. And just like everywhere else in social media, things are repeated and copied 1,000 times a day in the financial social media, and you can lose very quickly what something actually meant or what the data might have been used for initially, and all of a sudden it gets repurposed to some other direction, and now you're talking apples and oranges, and you never notice the shift in the conversation. It's so important to make sure you're really talking about what the data is talking about. And that's why we try to follow the data as close as we can and forget about the narrative, because that changes rapidly.
So the algorithm that recommends music or videos on your favorite web platform actually never delivers a totally fresh and new experience for you. It's always tainted a little bit by tracking what you've done in the past, what you've consumed recently, and making minor adjustments. And if you pass it on to somebody else, these can happen slowly and people never really notice until it's really out of sync. But I noticed just even with the data that we use, Perry, we use TC2000. It's online, TC2000.com. That's our primary database for all the stocks and ETFs and the bonds, anything that's going to be in our portfolios. That data comes from there. When I actually place a trade, I have Schwab's Thinkorswim platform open. And one of the things I do in tracking data is I post the end of day market for the S&P 500, the triple Qs for NASDAQ, the TLT for the 20-year bond, and the DIA for the Dow. Because when the market opens up the next day, I want to know what the reference point is from yesterday's close. But when I posted that this weekend, this is not the first time, I noticed that there's penny differences between TC2000 and Thinkorswim. Which one is actually correct?
Where's the truth here? Yeah.
So even when you're looking at what you believe to be valid sources of data on the closing price of the stock market, you have to be really careful about what it is you're paying attention to, what you believe is true. And if you move off into social media, the risk of being wrong are even greater.
Especially if you're listening to someone's opinion about the facts. When you're looking for just say a closing number on the S&P 500, you're going to get something in the ballpark. We get disturbed when we see, like you said, Don, just pennies differences. Why is one 18 cents different from the other one? There shouldn't be a difference. And then you get back to, well, the New York Stock Exchange, billions of shares trade every day. And you're going to resolve that down to a number at the end of the day, and you're going to get some differences in what that absolute number is, and it may not be settled for a couple of days till everything's in, and you get to look at it historically. We don't do anything technically that a few cents either way is going to make a difference in what we're doing, but it's important to realize that that's what can happen to data, and and then if you're listening to someone's opinion about what that data means, that can change 10 times an hour. And you really need to make sure you go back to the source and you find out, okay, well, I understand what they're saying, but is this true or not? And you really need to double check where the data is coming from and was it reported accurately? Whatever that data source was, is it accurate, and is what they're saying about it, does it even make any sense? And sometimes you can find out people were quite a ways off, or they're attributing something to a data source that is not even what they're talking about. They've just made an assumption that's incorrect. And that's why you need to double check sources and opinions on sources all the time. You need to find those trusted sources that you don't have to double and triple check every time you look at them, or you're going to spend all your time doing that. But anytime you see something that's like, wow, that's really interesting, that's really unusual, you need to go back and take a closer look and make sure it's even accurate.
Well, even with end of day market data, and you mentioned it will be resolved by the end of the day, or in the Pacific time zone on the West Coast, the market closes at 1 o'clock. But the largest amount of volume activity is not occurring on the New York Stock Exchange. It's occurring on what are called ATPs, or alternative trading platforms. Those platforms are where the mutual funds and the hedge funds trade, the pension plans trade there. And you ask, well, that's not fair. I mean, they're buying and selling stuff, but we can't see what they're doing. Well, yes and no. The problem is that they need to sell or buy such a large portion of shares in whatever they're interested in that they would move the market if people saw what they were doing. So they trade on these alternative platforms. At the end of the day, their trades have to be reported. So when I do my end of day analysis and my end of weekend analysis, I always wait until after 3:30 Pacific time, that's 6:30 Eastern, because that's the deadline for everything to be updated and reconciled. And it's a bit more of a push now that we have trading settlement on 1 day delay instead of 2.
Right.
But then that's better than the 3 days it used to be. So technology has improved. It's brought along a lot of enhancement, but with it has increased the room for error in a much shorter time period. But if you are really into the market yourself, you'd be best off waiting for 3:30 or 6:30 Eastern to be sure that all the data has been posted. And where does that make a difference? Well, one of the things that we have is a scan for which stocks have momentum on the upside, which stocks have momentum on the downside, and ETFs. We look at those scans at the close, and you may find one of those scans has a lot of negative numbers in it. And by the time 6:30 comes around, when the ATPs have reported the dark pool and HFT activity, you may find that half of that red end of data, end of market close has turned green, that there were a lot of buyers there that weren't present, visible to the retail trader. And basically, even though we're an institutional manager of such, unless you have 10 billion under management, you're a small trader. You're not much different than a retailer as far as the market mavens are concerned.
We can get an audit done on that, Don, but I don't think we're over 10 billion. So
no,
yeah, well,
we're still looking for that goal.
yeah.
But it's very important to maintain perspective on this, and that's part of what's going on with, as we covered in our prior podcast on the Japanese yen carry trade, is that it's going to take a while to get all the data collected to find out really what machinations were being implemented over the weekend and into this first part of the week, and it will get settled out.
Right.
What we don't have is we don't have banks collapsing like we did in the great financial collapse, or
Correct.
Or with the rising interest rates when Silicon Valley Bank collapsed from a little over a year ago. We do not have the kind of economic catalyst here that would drive us into an extended period of recession. It's possible that we're going to get a recession sometime this next year. First of all, the NBER that tracks recession is always a year late in announcing them, so maybe one is already starting now. There's fear of that under what is referred to as the SAHM, S-A-H-M rule, created by Claudia Sahm, who last Friday, when she was asked about the fact that the employment data under her rule said a recession is here, and she said, well, not necessarily. One rule doesn't make a disaster. You have to look
And
for
good for her.
confirmation.
Yeah, good for her to come out and say that. And Chairman Powell said the same thing. You know, we have a statistic here which points to recession many times, but never rely on one metric. Never look at one thing and say this is what's going to happen in the economy, but because economies just don't work that way, and they don't always work the same. That's why economics is not like other areas, endeavors of study, and that in mathematics 2 plus 2 is always 4, but in economics the SOM rule can be tripped, but that doesn't guarantee we're going to have a recession. It's not one follows the other no matter what. It's not a must happen kind of metric, and don't look at it that way. So you have to wait for other things to happen to see, hey, are we going to slip into a recession or not? We always could, but just because the SOM rule got tripped doesn't mean we will. And even the inventor of the rule says that's the way you should look at it.
So just be careful of you don't get caught in the doom loop.
There you go.
It's easy to get so focused on the short-term minor stuff that you forget about the macro picture. And they're both important. So short-term issues within the market are typically minor bets on the bigger market environment.
Right.
And it's important to keep both of them in focus.
And people generally have a hard time keeping two things in their mind at the same time, but it is absolutely necessary. And like you said, Don, it's important to avoid that doom loop. All you do is look at the bad news, and all of a sudden, everything you look at seems to be circling the drain, and everything's going to go under, and nothing's going to work. You can always find that stuff, especially online these days. In the digital age, you can find all the negative news you want every day. You could probably talk yourself out of investing in anything every day. And it's important to avoid that, and be a good gatekeeper on what it is that you're consuming information wise. Make sure it's balanced, and make sure it's at least accurate, and then you have a better chance of being on the right side of where the market's going.
So that's probably a wrap here for today. So down here at the bottom of the screen is a subscribe button. Go ahead and click on that to be sure you get an update for the next ones that we post. If you want to talk to us about your portfolio, it's a freebie. Send us an email or give us a call. We'd be glad to chat with you. We can do an analysis online. We don't
Sure.
need to know how much money you have in your account. We just need to know what you own so we can help you understand and illustrate whether you own leaders or laggards. And should you be worried about the stuff you have, or should you go back to sleep and let it do its job for you? Anyway, you want to talk to us, give us a call. We'll be glad to chat with you. And remember to just subscribe down below. Have a great day.